Welcome to Tax Problems Explained from the perspective of an attorney, a CPA, and a former IRS agent.
Welcome to Tax Problems Explained from the perspective of an attorney, a CPA, and a former IRS agent with Lawrence T. Ullmann. With decades of experience inside the IRS and in private practice, Lawrence helps individuals and businesses understand how the tax system really works and how to resolve serious tax issues. I'm Leanne Lyon, and today we are talking about IRS audits. Lawrence will go over what actually triggers them, what doesn't, and how the IRS decides which returns to examine a little more closely. Hello, Lawrence. It's great to see you again.
Great to see you too, Leanne.
Thank you. Lawrence, at a basic level, what is an IRS audit and why does the agency conduct them?
Well, the Internal Revenue Service wants to make sure, number one, that people who have tax return filing obligations fulfill those obligations. Number two, they want the taxpayers who are filing returns to file returns as accurately and as honestly as possible. Audits help with both of those functions, because if someone is on notice that they may be audited, they're going to normally try to put the information on the return in as honest a way as possible. And also, if they know that they're subject to audit, they're going to file a return in the first place. So that's normally why.
Well, many people believe that audits are random. From your experience inside the IRS, how are returns actually selected for review?
Well, there's a lot of different ways. Probably the major way and the most important would be computer generated. There is various algorithms in the computer that are based on prior audits and other information that assign certain weights to a tax return as it's being processed by the service center. It gives it what is called a DIF score. DIF is discriminant information function. And the higher the score, the higher the IRS believes that the return would normally give rise to adjustments. That's the primary way in which returns are scored and then assigned to revenue agents for audit. But there are many, many other ways that this could happen. When I was a revenue agent, for example, if I'm auditing a return and I notice that, let's say, a vendor that was paid with checks by the client I am currently auditing, I can look at those checks and let's say I see that these checks are being cashed over the counter. That's going to make me wonder if this person is actually reporting income accurately. So I might decide during or after that audit to pull that vendor's tax return. There are just many different ways in which it can happen.
So, are there certain patterns or discrepancies in a return that tend to draw attention from the IRS?
Well, that's where the DIF scores come in, because it's based on comparing the current tax return that's being processed with similar tax returns that have been filed by other taxpayers in the same occupation or industry. And if the IRS notices that expenses in a particular area are higher than they would be for other taxpayers, that's going to draw attention to that tax return. Obviously, if the taxpayer is in some kind of a business where cash is involved, that would also increase the interest that the IRS would have in pulling that return for audit. So, uh, yes, what's on the return is is definitely as important as the filing of the return in the first place.
So, how do income levels affect audit selection? Does earning more automatically increase the likelihood of examination?
Not necessarily, but clearly, the more income an individual makes, uh, the audit of that return could result in adjustments that uh, would result in more tax, let's say, than someone who is just barely uh, making enough to have to report on a return in the first place. The IRS has limited resources, so they have to spread those resources and use them in the most efficient way. And taxpayers that have complicated tax returns and taxpayers that have high income levels, normally, if there are adjustments, those adjustments are going to be larger than the smaller taxpayer where the tax that results from the audit may be de minimis. So, to that extent, yes, if you have high income, uh, that could definitely factor into your return being pulled for audit.
Some taxpayers worry that claiming even legitimate deductions will automatically trigger scrutiny. How does the IRS distinguish between aggressive reporting and reasonable, well supported positions?
Well, I have personally had people ask me if they should not put a deduction on a tax return that's a legitimate deduction and that they actually paid for because they're afraid it might give rise to an audit. And I will normally explain no, if you have a legitimate deduction, take it. Uh, First of all, you may not be audited. And if you didn't take the deduction and you're not audited, you just wasted a deduction. But normally, the tax return has certain information on it, but the only way in which the IRS, just looking at the return before it's pulled for audit, is going to really know if something is out of kilter with what other taxpayers have reported in the past. The only way they're really going to know is by the diff scores, the algorithms that are built into the system that say, hey, taxpayer the current taxpayer's return has a very high contribution deduction compared to other people that have that same sort of adjusted gross income. Therefore, this may be a return that something was overstated in the way of contributions or what have you, and that's going to maybe pull the return for audit.
Does filing late, amending a return, or operating a cash based business change the level of scrutiny that a return might receive?
Not really. Filing late doesn't necessarily mean that the return is going to be uh, subject to more scrutiny. In fact, there are many people that believe that filing late actually may put that particular return toward the end of the line for returns that are being processed, and therefore it's possible that there's less likelihood of that return being audited. I don't believe that's necessarily true, but I mean, it is something that some people believe. Um, Filing an amended return in and of itself doesn't impact whether your return's going to be pulled. However, the reasons why you're filing the amended return may. And when you file an amended return, you normally have to put down why you're filing it, what you're changing, etc. That may very well factor in to someone deciding, oh, maybe based upon these reasons, this return should be audited. Uh, uh, so to that extent, yes.
Can you explain how automated systems and computer scoring factor into an audit selection?
Well, this goes back to what I was initially talking about with respect to the diff scores. Um, when I was an agent back in the 70s and uh, early 80s, uh, what would happen is we would sometimes be assigned cases that we would be required to look at everything, not just material items, but everything. These were called diff audits, and they went into the algorithms that the computers now use for diff scores. Um, so, yes, the IRS definitely has a computer system designed to give weights to tax returns, and those returns that get the highest scores are the ones that are normally picked for audit. But even if you get a high score, normally a human being, the revenue agent, let's say, that's assigned the case, is going to inject the human element. And that revenue agent may very well look at that case and say, well, despite the fact that it has a high diff score, I believe, based on my experience, that the chances of there being errors and giving rise to additional deficiencies is small, and that return could then be what's called surveyed after assignment and given back to the group manager uh, to get another case that may have more of an audit potential.
So, without discussing confidential details, can you walk through a general example of a return that was selected for audit and explain what ultimately determined whether the matter was resolved efficiently or became more complicated?
If if an agent goes in and starts auditing a case, uh, a particular tax return, the agent may start off by only being interested in a couple of accounts. However, based upon the audit, the agent may very well expand that audit. If he or she finds things that increase suspicious activity. Very briefly, I once had a case where a taxpayer, one of the issues that I was auditing, the taxpayer had a uh, vacation home up at Lake Tahoe. Uh, and of course, I'm in the Bay Area. Lake Tahoe's about 4 hours away. Normally, a good agent is going to have an interview with the taxpayer, ask questions, and in a way try to lock the taxpayer into particular positions so that the taxpayer can't later start changing the uh, uh, the narrative. Um, when I discussed things with that taxpayer, asked if the taxpayer spent much time up at Lake Tahoe, and was told no, he was almost never up there. Later in the audit, when I started looking at gas receipts, I started seeing multiple gas receipts that the taxpayer had that were up at gas stations in Lake Tahoe. So obviously, I went back to the taxpayer and said, I'm a little confused, sort of like Columbo. And you indicated you were almost never up at Tahoe, but I see various gas receipts showing you were up there quite often. If something like that happens, obviously, I'm going to expand my audit and go into more areas.
So, as we wrap up today, if someone receives an audit notice, what is the first step that they should take to prepare and protect themselves?
Well, if they are going to get a professional, whether it be a tax attorney, a CPA, an enrolled agent, if they're going to get someone like that involved, do it at the very beginning. I don't have enough fingers and toes to go over the number of times the taxpayer comes to me after the audit is halfway done and after a lot of damage has already been done. Uh, that could have been all avoided if I'd have been involved in the very beginning. I mean, the average taxpayer, if he or she is communicating with the revenue agent is going to answer questions and not really understand and appreciate why those questions are being asked. If, on the other hand, a taxpayer gets someone like myself involved in the very beginning, I may very well not even have that taxpayer at the audit. This way, whatever questions are being asked of me by the revenue agent, I can say, I'm not sure. Let me get back to you, and it'll give me time to check out the facts and see what the situation is. If the taxpayer is sitting there, the revenue agent is going to expect the taxpayer to answer immediately, and that can sometimes result in problems. So I guess in answer to your question, Leanne, if you're going to get someone involved, get them involved at the beginning. It's a lot easier to avoid problems than to try to fix them after they become problems.
Quite a good point right there. And that is it for today's episode of Tax Problems Explained from the perspective of an attorney, a CPA, and a former IRS agent all in one. If you have questions about an audit or want to understand your exposure before filing, you can visit lawrencetallman.com. Thanks for listening, and be sure to like, subscribe to the show, and share this episode with someone who might need it. Thank you, Lawrence.
Thank you, Leanne. Have a great day.
You too.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.